Paramount. President and CEO Bob Bakish joining us. Bob, good to see you again. Thanks for joining us.
Great to see you.
Talk to us about some of the questions you think will be coming at a Paramount at an event like this.
Questions? Well, certainly the Charter Disney thing's a topic of conversation. Strikes, topic of conversation. Ad market, topic of conversation. Streaming writ large, topic of conversation. So there are plenty of things to talk about here. And fundamentally, our point of view is we're continuing to push Paramount forward, transform the company. We're arcing through our peak investment year in streaming, returning the company to total company earnings growth next year, and we're feeling good about all that as we navigate, some short-term challenges.
Talk to us about your streaming initiatives. You've had a lot of big hits, of course, Yellowstone, 1883. So this year is the peak investment in DTC or direct-to-consumer. Is that a profitable business next year? Is that another way of looking at it or not yet?
So we're thrilled with what we've built in streaming in a couple of short years. Obviously, that starts with Paramount Plus. Over 60 million subs as of the second quarter, 50% revenue growth in the second quarter of 23. Yes, we've been investing in it, and as you said, 23 is our peak investment year, but we've got real momentum there. We set out with a broad thesis to build a cornerstone service for consumers. We call it news, sports, and a mountain of entertainment, and we are seeing that very much come to pass. Business continues to scale, yes, it's an investment, but that investment is paying off, and people will see that continue to go forward in the marketplace, attract fans such as yourself with great shows from Taylor Sheridan or the NFL, which thankfully is coming back this week, college basketball, all kinds of stuff. So we feel great about our streaming product.
You mentioned the Charter Disney situation. What is your take on that, and what would an outcome there mean to a Paramount?
Well, look, obviously a lot of conversation about it. Frankly, this is something that we saw coming years ago, and we set out to build a company that would transform along with the consumers, and that goes to our asset portfolio, it goes to how we think about distribution, it goes to relationships. We have very much transformed Paramount. If you look at it with respect to distribution, we now have co-marketing agreements for our streaming products with virtually every major MVPD and vMVPD here in the US, where we have a shared participation in this consumer transition, including streaming, point one. Point two is, if you look outside the US, we've actually taken that a step further with these hard bundles where we provide Paramount Plus to a whole tier of a traditional distributor subscribers like Canal, Sky, et cetera. We love the financial expression of that. We love how that scales our business. Point three is you look at distribution here in the US and skinny bundles like Charter Spectrum Essentials, which is a topic of conversation vis-a-vis the current situation. We've been there, we are there, we like that. That sector of the market is growing. It's important to be included in it. Again, it is part of this consumer transformation. And we're taking probably the most important step today with Paramount Plus with Showtime, which is a true multi-platform product, available on linear, available on streaming, obviously. And one of the things we're doing on linear is for a traditional Showtime subscriber, soon to be a P Plus with Showtime subscriber, they're getting credentials to the apps. We have that deal in place with multiple MVPDs, vMVPDs, among the biggest ones here in the US. We are thrilled with the financial expression of that deal. And again, it's about transitioning consumer behavior. It's about looking forward. And that is very much what we're doing. So my point is, all boats are not created equal. We've been on this for a while, and thankfully, we don't have a 100% sports product, which I think provides some particular challenges in this regard.
But I see the product, I see the IP that you have, the NFL, you look at things like Yellowstone. Are the distributors undervaluing the power of the content that you create?
Look, Sumner Redstone, may he rest in peace, said it long ago, content is king. People don't watch apps, they watch content. And again, thrilled the NFL is coming back this week. NFL has been a great audience vehicle in traditional linear television, which it helps make CBS the #1 network in the country now for the 15th straight year. And it's great on Paramount Plus, both in acquiring subs and in engagement, i.e. keeping them entertainment. And that's just one piece of our thing. So yeah, I think Look, I think distributors understand the power of content. I was talking to MVPD CEO last night. They understand the power of content. The focus has to be that we together modernize these relationships. Just like Tom Rutledge, then CEO of Charter, said after our last deal on his earnings call when we were called Viacom CBS, he said the new deal represents a modernization of our relationship. Why did he say that? Because it included Charter Spectrum Essentials. It included our streaming products, both free, Pluto, and pay Paramount Plus. It's evolving with the times. It also includes an advanced ad partnership where we get data that allows us to target our linear spots in their ecosystem, So that's what you got to be doing, working with partners to together move it forward, unlock the broadband opportunity and elongate the TV media, the traditional side. That's what we're focused on. We're happy with the progress we're making, and we think that clearly differentiates us in the marketplace.
I agree. Content is king, and to that point, what is your content outlook? If we don't get an end to the Hollywood strike, that has also been a very big topic of conversation here at this conference. What does it mean to summer 2024 in terms of the box office? And then, do we even see an end in sight to this strike?
We are saddened that we couldn't come to a resolution with SAG and the writers to avert this situation. Obviously, we're now in a strike. Certainly, attention's being placed, and we're hopeful that we can get to a resolution. But at the same time, we have a responsibility to our consumers, people like you, and to our distributors and advertisers to continue to engage people with great content. You see that in the alternate CBS slate we've mounted, where we're pulling product from international, like the UK version of Ghost. We're pulling product from streaming, like SEAL Team, which used to be a CBS show, went to Paramount Plus, now is going back to CBS, like Yellowstone, which we were talking about before we went on air, which will run from episode 1, coming out of 60 Minutes in a double. Think about it, NFL into 60 Minutes into Yellowstone, that's killer night. And we're doing longer versions of some reality shows like Survivor and Amazing Race, 90-minute versions instead of 60-minute versions. So we're pulling all these levers to keep people entertained and keep our entertainment content compelling. And we'll just have to see how long this duration of strike goes and how that, yes, affects 24 and the films in 24. And the good news, we have a number of films in the can, so we're good for a while, but over time, we'll have to see how to navigate it.
Before I let you go, one analyst here told me, the Paramount stock is at lows. We want to see the company reduce debt. Where are you at on reducing that debt, and is that a big priority or a big focus for you next year?
So go back to 2023 as peak streaming investment year. 2024 streaming earnings losses reduced significantly, which in turn drives growth in total company earnings. That is the most significant on a multi-year basis de-lever of the company, but add to that what we've done with respect to non-core asset divestitures, things like Simon & Schuster. That is additive to our, call it, leverage ratio as we close it. So yeah, we will absolutely de-lever this company on a multi-year basis. We said 2 years ago this was our peak investment year. We knew that would increase leverage, but it's part of a cycle. And the good news is our investments are paying off. We are very much creating a scale streaming business that is, and you saw it in the second quarter, our losses in streaming were lower in the second quarter than the comp quarter. So we're on the right trajectory here. It will create material value. It will grow earnings. It will de-lever the company. And we're just focused on executing as we do so.
All right, we'll leave it there. Bob Bakish, President and CEO of Paramount. Thanks for always making time for Yahoo Finance. We appreciate it. I know these are very busy times. Thank you.
Well, we appreciate it too. Thanks, and we'll talk to you soon.
Thank you.